Hello, and welcome to the forum. Every week, we take no more than 5 minutes to discuss 3 highest conviction ideas surfaced across the Smartkarma network, cutting through the noise and helping you zero in on what truly matters most. Without further ado, let's dive into this week's ideas. Good evening, ladies and gentlemen, and welcome to the Smartkarma Forum. The forum is a high-impact weekly live webinar exclusive for Smartkarma Plus subscribers, where we use the forum to discuss the best highest conviction insights surfaced across the Smartkarma network. The forum is meant purely for informational purposes and does not constitute investment advice. It is the opinion not of Smartkarma, but that of our insight providers, and Chatham House rule applies. At the end of every week, we take video recordings of the forum and convert them into short bite-sized pieces and upload them onto our YouTube channel to make it easy for you to revisit these ideas at your own time and pace. This also makes it easier for you to share these ideas with your friends and get their feedback. Every week, we try to bring you a range of ideas from large caps, small and mid caps, as well as core thematics. Today, we'll begin by looking at YG Entertainment. Then we will move on to Xinhua Winshare, and lastly, we will take a look at Italian banks as the first domino. Let's begin with YG Entertainment. The ticker is 122870KS, and this is covered by Douglas Kim on the Smartkarma platform. YG Entertainment produces and markets music recording, handles artist management, concert production, and more. Their newest girl group, BabyMonster, will be popular, but higher probability scenario is for it to fall below expectations. Blackpink contribution to sales and profits are likely to peak this year. Consensus estimates YG Entertainment's sales and profit growth to be slower in 2024. Shares have overextended and at lofty multiples, 30.2 times PE and 16.3 times EV to EBITDA. Next, we have Xinhua Winshare. The ticker is 811 Hong Kong, and this is covered by Osbert Tang. Xinhua Winshare operates a chain of retail bookstores and provides ancillary services to book publishers. Despite solid outperformance, its shares is more than 100% covered by net cash of 7.6 billion renminbi. First quarter of 2023 results showed operating resilience as recurring profits soared 48.5%. Its franchise in textbook publication and distribution stayed well protected, securing profitability outlook. Trades on 4.5 times PE with secured 6.6% dividend yield. Lastly, we take a look at the question, are Italian banks the first domino? This is an insight covered by Andrea Steno. There are risks that credit tightening may trigger trouble in the Italian banking sector. They have a significant reliance on domestic treasuries, more so than their European counterparts. They face difficulties funding targeted longer-term refinancing operations repayments. Their reserves don't meet their expenditures. They'll have to sell assets or find liquidity in the market at higher interest expenses. Watch the BTP bond spread in the coming months. It has severe implications for asset markets. If you found the forum useful but have follow-up questions, please feel free to continue the conversation on Smartkarma. We hope to speak to you next week, and until then, all the best and goodbye. That's it for this week. You can find more ideas like the ones we discussed today on demand on our YouTube channel. Remember to subscribe and hit the notification button so you'll never miss out on another episode. If you liked these ideas, spread the word. Tell a fellow investor about Smartkarma Plus and follow us on social media. Just search for Smartkarma. And of course, don't forget to visit smartkarma.com for more independent, differentiated investment insights. Thank you for watching and see you next week.